I'm Portfolio Update, and in this week's Osborne Foreman, I'm going to show you the UK stocks that I bought, as well as the top rising and diving stocks in my portfolio. And if you like the video, please drop one of these to beat that YouTube algorithm, as it is much appreciated. According to Google Finance, the FTSE 100 is up 0.7%. The FTSE 250 is up 0.77% and the S&P 500 is up 0.34%. Naturally, my portfolio has massively underperformed the markets, and I actually had speculated last week that it would do exactly that, as it had a fantastic run up. This week my portfolio has dropped by 3.73%. And whilst I could be negative about this, I could be disappointed that I have lost money, even though it doesn't count as a loss until I've crystallized it and sold the position. I'm more than happy, as it allows for a positive balance in the portfolio. Sure, some of my stocks are down, and since a few of my positions in the portfolio are really struggling with momentum at the moment, it means that whilst yes, these other stocks are touching all-time highs, I have got places to put this cash and invest. And if you're interested in my Patreon, click that link in the description down below. And I'm aware that today's camera angle is different. In case you were wondering, I am sat on a drum stool. I've put the drum stool up, I'm higher up, and hopefully now my head doesn't look as big. Anyway, the top riser in the portfolio this week was Games Workshop, with shares rising by 1.02%. This is due to the idea that they hosted their Skulls for the Skulls Throne event, or actually now named Warhammer Skulls. This is a big event that they host on an annual basis based on their online video games, and this is where they announce to the fans of the fantasy scene exactly what games are upcoming, and they made 14 big announcements. I don't really follow the likes of Warhammer 40k, but they are making a sequel to a game that has not had any development for the last 25 years. And so this could be a good attempt to bring up some of the older fan base that perhaps had left in the past. And this is supposedly quite a big games announcement called Warhammer 40k Chaos Gate. They've also added a few more DLCs to some of the games that I play, such as Total War Warhammer 2, adding a new faction, as well as reworking one of the older Beastmen faction that hadn't been developed or changed since their initial release about 4 or 5 years ago, which is definitely a positive improvement for the game, as well as announcing a new legendary lord for Total War Warhammer 3. This is probably going to sound like complete mumbo jumbo to any of you that don't actually follow the games that they have themselves but are invested in Games Workshop. Just note, with the likes of this Total War Warhammer game, the more DLCs they released, overall the more profitable the game is. And you may say, well yeah, that's obvious, isn't it? But it becomes more exponential with the likes of this trilogy, because in the third game, when it is released, in order to have access to the DLCs in the second and first game, you need to buy them on those second and first games. And then what happens in this third game, at least in the second game, what they had done is that with Warhammer 2, they combined the map in Warhammer 1 and Warhammer 2, pushed them together, and then said that if you own the DLCs in the first game, that you could play as those factions that you'd bought in Warhammer 2. And so this is going to happen with the third one. And so more DLCs for the second game, despite the upcoming game's new release, is a very good thing, as it does mean they're going to be making a lot more sales. This is a very cash generative game, and it is a very popular one at that too. There's also the likes of Vermintide 2, which is no doubt a popular game, but certainly nowhere near as popular as Warhammer 2. And they've added like a new career pack, which may add a few more sales to the business. And there are a lot of other games that I've likely very much overlooked. And so if you know more about the Warhammer brand and you know more about these big games, please fill me in, as I'm not one to follow very much and I haven't really had time to play video games as of late. One silent thing though that was perhaps overlooked by quite a few people is that they are announcing a new Age of Sigmar Warhammer game in real-time strategy, or RTS. But the thing is the people or the company that is developing this is Frontier Developments, the ones that made Elite Dangerous, the background on my screen, and a competitor to one of my holdings, Team 17. With this in mind, I still hold the 69 shares of Games Workshop. Currently they're peaking all-time highs, and so I'm not likely to be buying more shares. However, if we do see more of a pullback, and when I say more of a pullback, if we do see a correction or a pullback, I'll likely be very interested in topping up this position. But as I mentioned, Frontier Developments, they are a competitor to Team 17. They are both video games developers. However, they are in different niches, so they aren't direct competitors. However, I would consider them competitors in the fact that they are both competing for a player's time, meaning that they, whilst Frontier Developments are going to want you to be playing Elite Dangerous in their catalogue, Team 17 is going to want you to be playing Worms and buying their indie games as well. And this is where it's interesting, because Frontier Developments had risen on Friday by around 8%. Team 17, however, this week is my top faller in the portfolio, or diver, and has dropped by 6.77%. And I'm actually not too bothered about this, and in fact, I'm glad that I am holding Team 17. This is because if I were to be invested in Frontier Developments, that would give me more exposure into Games Workshop, which, don't get me wrong, that's quite a positive thing to have, but it may be a bit too much, and having this much reliance on one game, like Frontier Development does with Elite Dangerous, would provide for a lack of diversification, and I'm not sure if that would work out well. And so at least then it means that there is no overlap between Games Workshop and Team 17, and they can exist as single holdings doing their own thing. And what I prefer about Team 17 compared to the likes of Frontier Developments is the idea that they have these arcade games. A lot of them are family friendly, anyone can play them, and I think there could be a much more fleshed out esports scene in the future. They can be on mobile devices. Elite Dangerous is a very difficult game to run. You need top of the line flagship PCs. I don't know why I'm pointing there because that's not a flagship PC with a GTX 1060. Regardless, in Elite Dangerous you need a lot of computing power. Team 17, the likes of Worms, Escapists, Overcooked, they don't require too much. In fact, you can play this on a mobile phone, a laptop, or probably even a tablet. This, I think, is advantageous. This will bring up a higher player base. Mobile games, for instance, are very popular games because they are easy to access. And so with this in mind, I would hope that they could develop a much more, or since due to their arcade style games, that they could build up an esports scene. I've not dived too deep into this, and Worms may already have an esports scene, but I certainly think there's that potential for the future which could build up more fan following and also more revenue for the company. And so I think Team 17 is more than just an exposure into a video games developer, but also perhaps a potential exposure, and this is if they develop in that way in the future, towards a more esports genre related, or it's not really a genre, but towards an esports driving company. Even the recent acquisition Golf with Your Friends, that is a competitive game, and with the wacky physics, that would make for a very entertaining esports in my opinion, especially if collisions are run, because if I was in that game, I would just be whacking everyone else's golf ball off the map because I'm a troll. With that in mind, I still hold the same amount of shares of Team 17, 228 shares, although if they continue to drop in the next week, I'll likely be topping up my position. As last week I did buy one more share, but as I said, I felt they were a bit richly valued as they had increased on the basis of little to no news. Argo Blockchain had also had their May operational update, and despite this, had dropped by 3.58%. Bitcoin in this time period has traded very much sideways, although I suspect Bitcoin was down for the week on Friday close, and so that likely may have brought the price down, although that's speculation and I've not checked the graph as this has just come to my mind right now. Regardless, in their May operational update it was quite promising. They mined 166 Bitcoin compared to 163 Bitcoin in May. Their margins, as expected, had decreased. Obviously, Bitcoin prices have lowered. Their margins had gone from 85% in May to 82% in 85%, in April to 82% in May. That really isn't too bad considering how much Bitcoin has dropped in that time period, and I think it's in the ballpark of somewhere around 40%. A 40% drop in Bitcoin and a 3%, obviously this is 3% in basis points drop in their margins, that's really not bad at all, and Bitcoin can go a lot further down, and I think Argo Blockchain is in a very good position. They'd also announced that they had changed some of their contracts related to their Bitcoin mining machines, as one of them were behind on the machines, and so they had decided to then get their machines elsewhere and work with another one of their partners. I don't think this is very much too relevant, but it does show that in this tight market where the likes of graphics cards or these computing machines are in high demand, they're able to navigate through the market and find find places to source these parts. And it's also likely the dip was today is that in the last week they'd gone up, or the week before they'd gone up by over 30%, and so a pullback of around 3% is a nice way to consolidate and cool off the shares. And if you'd like to sign up to my stockbroker and get a free share worth up to £200, sign up to Freetrade using my link in the description down below. So this week I bought some shares of one stock. This stock may come as a surprise, as I've not bought any shares in this stock for well over 7 months. This stock is Boohoo. Boohoo is one I've not spoken about much on the channel, but I did speak about a lot last year. That's because there's been little to no controversy on this business, and in the background they're just carrying on marching on. Instead, what they're doing is they're continuing to sell their products and make likely a heap ton of money. I decided to buy this week because shares had been weakening. They are dropping around close to the £3 mark, and I decided that if I'm going to hold this stock for the long term, now could be a good time to buy in. And this might be because there are some positive share price drivers that I expect to see in the medium term that mean that buying now at this valuation is likely a good price to achieve. And so long as the shares remain at this valuation and stagnate and trade sideways, the underlying fundamental financials of the business are only increasing, so it feels like each day you're getting a slightly better deal on the company. I still believe that Boohoo are going to do very well. We've seen the likes of Associated British Foods or their subsidiary Primark, and they've done exceptionally well in the last few months as the lockdowns had eased and the shops had reopened. I still think there's a lot of buying demand for Boohoo. People are going out a lot more. People want clothes. People want to show these clothes off to others, especially when they're likely in the age group or range of 30 to 16. This is where you want to show off more. Well, at least in my opinion, although that could be some bias and this could scale up on age, as in my limited experience, I'm only 21, so I don't really know this. But at least from what I've seen, my age group, it's all about dressing up and making yourself look good and to try and promote the attention of others. Perhaps this is a hormonal thing or biological thing in which young people are trying to attract a mate, and so they try to dress themselves well and nicely. That way they go to Boohoo. They can get trendy, quality fashion, perhaps at a cheaper price. And so that's why a lot of people will do that. And I think especially as the festivals and the clubs start coming back open, that's when we're seeing likely a large drive in revenue, especially as the savings of all these individuals that have saved money during furlough or perhaps during universal credit. And so this money that was saved will then be spent, and I think there's a lot of money to be spent. And so I bought 41 more shares of Boohoo, and it did drag up my average price. My original average price was around £2.4834. Now it's actually around £2.49 and a half pence. This is a slight move, and I only bought 41 more shares, and so it's quite a drag upwards, although I don't mind, because for the longer term I would like to have this equity in Boohoo, and the bigger position I have, the more I'll likely make from it. An interesting way to view this is because I have 2,541 shares. Every time shares of Boohoo increase by 1 pence, I make £25.41. That may not seem like a lot, but for someone who's making about £9 an hour working in a pub, that certainly could be a lot if Boohoo starts to trend upwards and have a lot of positive momentum. I've also with the likes of Asheton Group, which I haven't spoken about much as of late, as they keep powering on going up, although this week they've only increased by 0.19%. With the likes of Asheton Group, I'm increasing my stop loss limit. Because there aren't trailing stop losses on Freetrade, I've decided that I'm just going to manually increase it. Originally it was £42.50. This would have represented a 15% decline when Asheton Group were at £50 per share. They've now increased to £52 per share, so I'm going to increase the stop loss limit to £44.20 so that still represents a 15% decline. That way I protect myself from further downside and the off chance that their valuations do change and investors become less bullish. And I only made this stop loss 20 days ago, and to see that shares have gone up even more since then is quite a good sign for the strength of the portfolio. There's also another thing, and I was informed by JKR, or Jacob from JKR Investing, that you could get BOTB on the likes of DeGiro. This is where I'm going to be opening a general investment account, and I may update you all in the next week as I may purchase some shares of BOTB. Thank you for watching. If you're interested in how I find high quality, high growth stocks in the UK, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.